Daljeet, hi, afternoon. Do you think, aside of the global weakness, part of the fear in the market right now also could be with news around the SEBI F&O norms, which my colleague just highlighted?
Yeah, good afternoon. Yes, I think that would be one of the considerations because these days markets, you will know that 95%, 98% of the total market volumes are F&O. So most people are worried about how things will pan out over the period and the way things are being talked about, more strictness there. So obviously, it will have some impact on the market volumes. But I think that will be just again say temporary issue. It may be 1 or 2 days issue, and then people will get accustomed to what are the new norms. Initially, yes, there is always a resistance to the change. We might see some of that impact happening. Also, we have to understand that market has been moving in one direction for quite a long time. Everybody has been waiting for some kind of correction. Every day you talk to so many people, or investors, other stakeholders. Everybody is saying why market is not correcting. So market is just looking for some reason for correction, which may or may not last for long, and which may or may not be justified. But that is what the market is all about. So I think one should be ready to see some of this volatility, and that this, of course, the global uncertainty, especially on the rate side. This again is a good confusion. No? Cutting of rate is good for the market or not good for the market. Some people will say cutting a rate means that okay, you are waiting for this for a very long time, that Fed will start reducing the rates, but it also means it is doing because data is not coming well. Then this fears of recession in US, all this will again come up. So it's both two ways, both the things are coming in. What I would say is for our investors and for long-term investors, I think this will create some mispriced opportunities in between. And if you have liquidity, you should look for those mispriced opportunities. Otherwise, just stay put. This will just be a temporary thing, but it will pass.
That, Daljeet, you find those opportunities? Any themes or sectors that you can talk about?
Yes, we are looking at pharma, agrochemicals, and some of the manufacturing themes, which could be across the sectors, where PLI schemes are there. There are some new age themes like uh, say environment related products, environment related companies which are into those kind of activities. It could be on services side, it could be on the product side. Then there are this budget. There was a lot of emphasis on employment generation and skilling of youth, etc. So there are certain companies which are in the organized sector providing manpower to the organizations, looking for some kind of restructuring there also. So those kind of companies we are looking for, and they still have valuation comfort. I would say that over next 2 3 years, trajectory of earnings is very clear, and valuations are not very demanding.
Taken. So that's the view on some of the themes and sectors. But yes, have to say pharma as well as chemicals both are doing quite well. And let's pull up some of these intraday charts. Suven Pharma up 5%. Glenmark Life doing quite well. You also have Narayana Health doing okay for itself. Piramal Pharma is also up 3%. Remember, Monday is perhaps the day we might be hearing more about the US Biosecure Act, and for some of the CDMO players that might mean more opportunities. So some of these stocks might be factoring that in already. The other space, the agrochemical and chemical space that Daljeet was talking about. So Gujarat Fluoro has been doing quite well for the last couple of days. Sumitomo Chemical is up 4% right now. You also have other names doing quite well from that entire industry like PI Industries. So definitely some of these names deserve mention. PI Industries is the stock that I'm talking about because that one is inching higher along with Sumitomo Chemical as well as Gujarat Fluoro. But Naresh, what's your view on SBI and SBI Cards? Divergent move on both of them on account of a brokerage action today?
So would wait and watch further for the next few sessions because generally we see a move on the day of a report being initiated, and the next day there is a fade off. So for now, if you look at SBI, say 730 to 750 is a very strong support band. That's the low it did on the election day. That was the low back in March to May. So if we get a dip closer to those levels, then maybe that's a buying opportunity. So you want to be accumulating at 760 to 730 band, which is where it should bottom out. SBI Cards, on the other end, has been turning around for the last few sessions, broke out about 740. Now at 800, any fade off back to 770 would be a buying opportunity.
Okay, point taken. So we'll watch out for those levels on a couple of these counters. But
They have gotten only worse, actually. We're now at the low point of the day. It's caving in by a good 300 points right now. Kunal, where does the next support come?
So I think the next support for the index now is sub the 24,500 mark, which means we could be looking at least another 300, 350 point correction before the first level of support kicks in for the Nifty.
okay, Naresh, what's your view and what will be your recommendation then perhaps with the kind of positions people have? Should they just unwind? Should they carry on, hold on for Monday? What's the best strategy?
So for now, it is better to have no position because we've seen a one-day tick which does not go well with the global indices also. We've seen a sudden take, could be a FII selling happening today for the last day, etc. So we'll know better on Monday. For now, 24,500, 600 is a price point, which is a strong support. So at current levels, the risk reward on the downside to short also is not great and would long only on Monday, not today.
Interesting. But Naresh, is the weakest link still banks? I mean, today, of course, there is an exaggerated move by SBI after that Goldman Sachs note. But other than that?
So banking remains the weak spot because that was an index which did not make a new all-time high. We made a new all-time high yesterday, at least on the mid cap and the small caps. But what is interesting in today's move is the fact that ICICI, Axis, and other banks are taking a hit. You just have a 0.5% downtick on HDFC Bank, so that is not taking a large hit. Same is the case with the Kotak Bank. So for now, it seems like more of a sell-off from FPIs. We've seen there is lower holding in HDFC Bank relatively, underweight across the board. So for now, it looks like a one-day move. But yes, the weak point remains to be banks. Till the time we don't see banks reviving, the momentum continues to fade off on the Nifty as well.
Daljeet, if you could talk about SBI specifically, and if not that, at least the move that we are seeing from the PSUs to the private banks. Daljeet, the question is for you.
Okay. So see, banks actually overall, I think our view is slightly negative. We have actually reduced our positions in most of the banks. And in fact, right now we hold only the power financiers, no other thing in the BFSI space. So main reason is that if we see last 2 quarters, the asset quality issues have started cropping up. There are a lot of data points coming in that people are borrowing from multiple lenders. So exposure for these lenders is increasing to the same customer. That is a good red flag. And in the last 5-7 years, actually, we see almost all bankers have forgotten that there could be an NPA from retail side also. No? Everybody was clear that there could be an NPA from the corporate side, but from retail, there is no NPA. But that situation can change the way things have moved in the last few months. We have seen people borrowing from multiple places, this digital lending, faceless lending, and all of those things. So while that has created convenience, but it has also created a hazard in terms of asset quality. Second thing is on the cost of funds. Most of these, the best part for, or the best time in terms of cost of funds for all these banks is over. From here now, it will be more of very tightening situation, and unless RBI starts reducing the rates at a faster pace, which in our base case scenario is not the probability as of now. So I think for the banks, growth as well as asset quality, both will be a challenge in next few quarters. There is this fight for deposits. There are other alternate sources of income for people. So deposits are becoming much lesser scaler and costlier. So all these things are, I think, negative for the banking sector as of now. We believe that next 1 or 2 quarters, this banking sector shall remain an underperformer. And therefore, within the BFSI space, if one has to look, one can look at the specialized financing or some focused financing, which could be like power financiers, gold financiers. Those kind of companies could be of preference right now.
Daljeet, great to have you on the show. We'll let you go on that note. Thanks for taking time out.
If you like this video, then like, share and subscribe to ET Now.